Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
So, we've got 5 major stories on our radar today. First up, we'll be looking at why Elon Musk's venture into politics could vaporize $80 billion from Tesla's value. Then, we'll shift to a startling report that a massive copper shortage is threatening to cripple the entire global chip industry. From there, we cover a revelation that major British companies are quietly hiding devastating cyber attacks that have cost them hundreds of millions. After that, we'll unpack why Robinhood CEO admitted its new tokenized shares aren't actually equity, setting off regulatory alarm bells. And we'll wrap up with the story of an AI cloned politician's voice being used in a sophisticated attack on foreign ministers. Tesla is on a collision course with an $80 billion loss in market value, and the catalyst is, well, it's classic Elon Musk. He just announced he's starting his own US political party. The venture, called the America Party, was unveiled after a public spat with Donald Trump, who dismissed the idea as ridiculous. This isn't their first public disagreement. A previous one on social media wiped a staggering $150 billion off Tesla's value in a single day. So, naturally, investors are sounding the alarm. One firm, Azoria Partners, has already scrapped a planned Tesla-focused ETF. Its CEO stated they have real concerns about Elon's ability to be a full-time CEO for Tesla with his new full-time job. Another major investor was more blunt. The sooner this distraction can be removed and Tesla gets back to actual business, the better. This all comes at a terrible time. Tesla's already dealing with a second straight drop in quarterly deliveries, and its stock is the worst performer in the Magnificent Seven this year. To sidestep an annual sales decline, they need to deliver over 1 million vehicles in the second half of the year. A huge lift, now made even harder by potential political fallout. The whole situation puts Tesla's board in a very tight spot. As one business law expert noted, this is exactly the kind of thing a board of directors would curtail removing the CEO if he refused. But critics have often described the board as supine and quick to defend Musk. With billions on the line and investors in revolt, the question is no longer just about a new political party. It's about who is truly in control at Tesla and whether the board will ever take the wheel. Speaking of massive risks to major industries, the problem at Tesla is centered on one person. Our next story, however, is about a threat that's far more fundamental and could make the last global chip shortage look like a practice run. A new analysis from PwC projects that climate change is on track to disrupt nearly a third of the global copper supply for the chip industry by 2035. That's a 32% disruption risk, which is 4 times higher than today's levels. If you remember the last chip shortage, it crippled the auto industry and cost the US economy a full percentage point in GDP growth. This new threat is more basic. The problem isn't a pandemic or a trade war, it's drought. You see, mining and processing copper is incredibly water intensive, and the world's biggest copper producing regions are simply drying up. This is where the situation takes a more complex turn. By 2050, that disruption risk skyrockets to between 42% and 58%. And according to the report, no chip-making region will be spared. It's a systemic threat affecting miners in Chile, China, Australia, Peru, and the United States. The most chilling part? The report states that by 2050, around half of every country's copper supply is at risk, no matter how fast the world reduces carbon emissions. Take Chile, the world's top copper producer. Today, 25% of its production is at risk. Within a decade, that's projected to hit 75%. By 2050, it could be between 90% and 100%. Researchers are hunting for alternatives, but right now, there's no substitute that can match copper's price and performance for the billions of circuits that power our modern world. It all begs the question, the last shortage stopped car factories. What happens when the very element needed to make the chips themselves starts to run out? While the chip industry is bracing for a future crisis, some of Britain's biggest companies are dealing with a disaster that's happening right now, and they've been trying to keep it quiet. 2 massive cyber attacks just hit major British companies, and you probably never heard a word about them. That stunning revelation comes directly from the chairman of Marks, Spencer, Archie Norman, who is sounding the alarm after his own company was brought to its knees. In April, MS was hit by a devastating cyber attack that costed a staggering £300 million in lost operating profit. The breach was so severe, it forced the retail giant to suspend all online shopping for 46 days straight. So, who was behind it? MS believes the attack was orchestrated by Dragon Force, a ransomware group that got in using simple social engineering. After all, that's often how it starts. Once inside, the hackers went silent for a week before making their move. Now, the MS chairman is publicly calling out a big deficit in cybersecurity knowledge, claiming other corporate giants are hiding their own disasters from the public and the authorities. He's pushing for a new law that would legally require companies to report any material cyber attack, aiming to end the culture of silence that leaves everyone vulnerable. The fallout for MS has been immense, though the company did double its cyber insurance last year in a stroke of luck. But perhaps the most chilling lesson came from their own general counsel. His advice for other businesses facing a total systems collapse? Make sure you can still operate with a pen and paper. In a world run by data, that's the stark reality of what it takes to survive. It's one thing for a company to hide a disaster, but what happens when a CEO openly admits their hot new product isn't quite what it seems? That brings us to Robinhood. The company's CEO, Vlad Tenev, just made a statement on television about their hottest new products that has regulators scrambling. Here's the situation. Robinhood launched a product in the EU giving everyday investors access to tokenized shares of private tech giants like OpenAI and SpaceX. For the first time, retail traders could get a piece of the pre-IPO action. What really brought this to a head was OpenAI's public response. The company posted that any transfer of its equity requires their approval and flatly stated, "We did not approve any transfer." So what are people actually buying? On TV, Tenev confirmed it is true that these are not technically equity. He explained it's an ownership stake in a special purpose vehicle that gives users exposure. But his most jaw-dropping line was this: "In and of itself, I don't think it's entirely relevant that it's not technically an equity instrument." He argues the important thing is that customers get exposure to the asset, but this has, unsurprisingly, set off alarm bells. Now, regulators are getting involved. The Bank of Lithuania, Robinhood's lead authority in the EU, has officially announced it is awaiting clarifications and will be assessing the legality and compliance of these instruments. The regulator stressed that information for investors must be clear, fair, and non-misleading. Tenev says he's happy to answer questions and expects scrutiny. But this leaves a massive, high-stakes question hanging in the air. When a company is selling access to an asset, but the asset's owner says that's not ours, what exactly is in the box? This question of what's real and what's not in the digital world takes an even more sinister turn in our final story. We're moving from financial instruments to political impersonation. An imposter just used AI to clone the voice of US politician Marco Rubio and used it to contact foreign ministers. This wasn't a prank call. It was a sophisticated cyber attack targeting the highest levels of government. Using the Signal messaging app, the attacker sent AI-generated voicemails and texts to 3 separate foreign ministers, a US governor, and a member of Congress. The goal, according to a State Department cable, was to manipulate targeted individuals with the goal of gaining access to information or accounts. The warning was clear: any information shared could be compromised. The State Department was forced to alert all diplomatic staff and their international partners about the threat. But that's not the whole picture. The real turning point is the revelation that the official cable also detailed a second separate spear phishing campaign from just a few months earlier. This attack targeted think tanks, activists, and even former State Department officials. And here's the detail that's truly alarming. The perpetrator of that campaign demonstrated, quote, extensive knowledge of the department's naming conventions and internal documentation, perfectly faking State Department logos and branding. So who was behind that meticulously researched operation? The State Department says industry partners attribute the campaign to a cyber actor associated with the Russian Foreign Intelligence Service. This new wave of AI-powered impersonation raises a terrifying question for global leaders. In an age of perfect deepfakes, how can you ever be sure who you're really talking to?
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.